Hey, welcome to Close the Beat, everybody. Happy Wednesday. How you doing out there? Hope all is good with you guys. Hope you're having a good day. Hey, here's the lighting. That's what I'm talking about, right? That looks right. Welcome. We're financial advisors here at Jazz Wealth, and we hope that in 2023, if you're working with a financial advisor, maybe you'll consider working with us. Just ask the touch points. Like, is your advisor having a Thursday night class that we lay back called Wine and Wealth? Do they have weekend emails called Notes from Jazz? What's your problem?
We got an echo somewhere. Is the source up?
What's your problem? Oh, I got you. I fixed it. Where's the touch points? That's all I'm saying. It's like, if you have an advisor that's like, we'll talk like every now and then or whatever. Every week we're doing two things for you with our class and our emails. You could schedule your own calls so you don't have to actually like wait a whole year to talk to an advisor or anything there. We're not using third-party software. We build what clients want and what's helpful to them, and wait till you see what's coming up next, man. Wait till you see what's coming up. We're calling it Project X. I haven't told anybody about it. Besides Haley. Haley knows, but she's learning to keep secrets. So hopefully she does a good job there. But Project X in the works. Wait till you see what we're doing next. Anyways, let's talk about the stock markets here today. You had a little bit of chop to start the day. Pop on over here. We'll take a look at some charts. A little bit of chop to start the day. Actually, at one point, we went positive for the year. Real estate popped this morning thanks to the bond market actually popping. You got the bond market trying to recover from all of last year's slide, man. The first year ever where stocks and bonds were as correlated as they have been. Finally broke that downtrend. We're starting to try to work our way back up. And that bond push there, remember, bonds go up, yields go down, and that's good for things like real estate. So if we were to look at something like real estate, one of the better performing areas of the market here today, actually I'm going to pop on over here. It was the best performing area of the market. Financials as a whole, they rallied today, looking pretty good there. And they have been. That's nothing new, but Visa, MasterCard, all the big banks in there as well. Oops, sorry, I'm on the wrong page there. All did well. Nice little strong rally out of what are a lot of discounted stocks at the moment. You know, that they haven't been the best performers, at least recently, some better than others. But so that was going on there. You got basic materials looking pretty good as well, at least as a whole. Everything besides like, you know, Lincare and things like that. But otherwise, a little bit of a rally there in a sector that was strong going into the last part of the year, last year, meaning relatively strong. Why am I like off to the corner, man? You got to see this pretty face. So I want to point out semis getting a head start on their pre-CES rally. So typically during the CES event, semiconductors do outperform every other tech space that's available anyways that you can look at. They were all higher on the day there. You got some some discount hunting there with like QCOM being one of the better performers out there. NVIDIA, everybody's trying to find the bottom on that one there. Texas Instruments did well. One of the better performers on the day, but a little choppy overall. Micron Technology, super discounted and the best performer, I believe, in the industry. Communication Services did well today. That was a tough one, right? That was a tough place to be last year if you were playing along, but it's the second best performing sector here today. With about a 2% gain, and so stronger start for them overall. And that really, look inside, if you want to zoom inside just a little bit, Netflix finally waking up there, better performing moves there. And Disney, I'll point out Disney just for fun, trying to work its way out of a downtrend. Yeah, they're getting their act together over there, you know, so they're doing what they got to do. If we pop on over to energy and particularly oil, so energy, the commodity oil space there was the best in 2022, and now it is the worst in 2023. Why is that? Why would it all of a sudden just, you know, it was going so well. Why would it all of a sudden just fall apart? Taxes. That's the answer. At the end of the year, you got tax loss harvesting. You're selling positions that are losing, maybe, for a little tax advantage there. You come into 2023 and you go, I had a great run. I just didn't want to sell in December because if I sell in December, that means I owe tax in this new tax year. I've only got 4 months to pay the tax. Well, if I just wait and I sell in the first couple days of the new year, that means I got January through December, and then I have the next 4 months after that. I've got all that time to pay, right? So potentially 15 and a half months before you got to pay the tax. And so that's really what you're looking at there, right? People taking profits on things like the XLE and the top players in that space. I will point out ExxonMobil held up pretty good though. right? So it did gap down on the day. It finished the day up a touch, not too bad, but that's really the standout. Because if you look at something like Chevron, down 1% on the day, and start digging your way through that space, a little bit of hit or miss inside of there. But anyways, now you know the deal behind that. We then had the Fed minutes come out, and the Fed minutes come out and show the Fed still wanting to raise rates and aggressively as well. And not only that, I think the real key to the Fed minutes coming out, because remember, that's a lagging indicator. They already had the meeting. We're just now seeing the minutes. But I think the real key to that was the fact that they said, when we start slowing the pace of rate hikes, we need to make it crystal clear to the public that this is not in any way a sign of potential easing. So expect that to be in their language as we come into the next meeting there, where they say, we're going to raise maybe a quarter point is what's pretty much projected. We're going to raise a quarter point, but by no means is this us moving towards a path of easing, meaning that they're going to bring rates down. So there you go. That's that. By the way, headline inflation numbers, the CPI number that everybody looks at, it's on pace. If it continues this current pace, so I'm not sure what the Fed's looking at right now, but they're looking at the CPI number, of course. It's on pace to be under 3% by middle of the year, 2023, if it continues. Doubt that it continues that pace, but we can all see it. Inflation's starting to move lower, and we got some good numbers today. Manufacturing numbers showed that manufacturers' prices paid, a key word there if you want to look it up there, fell for the ninth month in a row, and are just, falling apart like diving off of a cliff, getting back into more neutral territory. That's good. That plays into the inflation number because manufacturers have to pay for their goods and stuff that they put together, the product that they sell to you, and they're able to do that hopefully cheaper, and it means, we can pay a little bit less as well. That would be really good. All right, other than that, if we look around, anything oil related today, a little bit weak, right? Oil down about $3, almost 5% on the day. That's a rough little move for oil, trying to move back down to lows there. Remember what the theory is, the theme for oil going in this year. We talked about that yesterday. Retail saw a nice little pop here today. I would point out, where's gold? $14 on gold. So that's a new high for gold. So that one sticks out a little bit. Otherwise, as you look around, pretty much everybody got some level of participation today. Here's your home builders, which had been sort of holding their own relative to what's going on in the home building market there. Transports, some good, some bad inside there. We don't have to dive through all of this if you don't want to. Consumer discretionary, everything basically got at least a little bit of a boost today. If you go outside of that, obviously the dollar is still weak. And remember, what's that mean? Right? What's coming up? We have earnings season coming up. Remember, if you haven't been around, you haven't been watching, we've been walking you through what each company said regarding earnings. Now earnings season is coming up. They projected that the dollar would be hurting them going into the next quarter. Well, we're now into the next quarter. We're living it, right? So they went through the entire fourth quarter, and they're about to report on that. The entire fourth quarter, they were expecting the dollar to be pressuring them, pressuring their margins, right? And that just wasn't the case. So you now have a recipe for stocks that have guided for this sort of trouble, but in reality, it's a little bit better. So expect that to be one of the themes of the earnings season that's coming up here. All right, lesson of the day. Is the stock market cheap here? I know the stream is a little delayed, but I'll let it catch up for a second. Is the stock market cheap? Do you think that it's cheap? I've heard both. We get to hear from clients all the time here, calls on all day long. And one of the mistakes that you fall into is the word cheap is not price. In anything else in life, cheap is price. So that car was cheap. That home price was cheap. The stock market is cheap. That doesn't refer to this. It doesn't refer to price in the stock market. It refers to its value. And it's often pretty difficult for you to look at the value. A lot of people use PE ratios, forward PE ratios, however you want to look at it. And they determine whether something is cheap or not relative to that. When you're looking at price, you will hear the words oversold, discounted, parabolic, right? Things like that. That refers to price being either rather expensive or not. So when we say cheap, we're talking about the PE ratio, or any sort of fundamental analysis there. So here's, this is going to be a little intimidating at first. Don't let it scare you. We have off to the right we are trying to show this in a unique way. The S&P currently has a price to earnings ratio of 19.3. Where does that land, right? If I just shot that number at you, the PE ratio of 19.3, some of you would say that's a good deal. Some of you would say it's not a good deal. In fact, right about half of you should say it's a good deal and half of you should say it's not. Is $19.3 per share, or per share relative to earnings that are expected here, is that a bargain or is it not? Well, one way we can look at that is we can compare it to the range. And a lot of people do this. This is not my doings, but here's how we do this. So we say 19.3 is about 54% of the way between the lowest, the cheapest that it's been, and the most expensive that it's been. So that's why I say about half of you should say it's cheap and half of you should say it's not. That's where the stock market is. Now that's because of price. We've become more discounted here, and we found that the market has become cheaper. In fact, about 22% of all of the losses last year came from earnings being reset. And so right now the market is, you could say, glass half full, half empty. Well, I wanted you guys to be able to look a little bit further into that, because last year, remember, energy was the best performing sector. And it was like, okay, but is energy cheap or not, right? Is it a good value, or is it just that it's taken off and I need to hop on this train and get things going? Well, if we go over here, we can look at energy trading at 8.4 times earnings as a sector now. Remember, not an individual stock, as a sector. And 8.4 times earnings over the last 10 years, that's about 20% off of its most cheapest value, right? So it's still a good value if you're a longer term investor, even though price seems a little bit overbought, or was coming off of being overbought. The most expensive sector, and this is common, this is not anything new, but most expensive sector is utilities, 23.7 times earnings. That ranks basically at the top, the most expensive that it's ever been, right? So that would be a tough place. You want to see some earnings reset there. You want to see things pull back. If we were to look at the XLU, there you go. Let's go on over here. You can see that that's in the last year, it really hasn't made any progress as far as getting cheaper price-wise or oversold price-wise. So really expensive area to be investing if you're thinking about that. Where's your good areas to look? Communication services. It's both discounted or oversold on a price metric, and it's also a decent value, right? It's trading in the bottom 20th percentile of its total range over the last 10 years. So you go, okay, 15 times earnings for communication services should be seen as more of a discount or more of a value rather than being more expensive. You also have materials. Remember what we just say a second ago? Materials waking up a little bit, right? Materials a little bit stronger than the market. The price is holding up relative to the stock market. It also shows itself as a good value there. So you don't want to discount that area because you're like, it's boring. I don't really like looking at this stuff. You know, it's not my thing. Hey, you're going to want to go look over there. And then, of course, energy ranks in there as well. More expensive areas, industrials, technology, still. Technology is expensive there. Utilities, of course, and consumer discretionary, with consumer staples being almost about as expensive it's ever been in the last 10 years, I should say. I take that back. In the last 10 years, because this range is a 10-year range. So if you buy consumer staples here, you've missed the boat, right? That's another way to look at it. If we go to over here to the chart, right? You're paying somewhere $74.50, right? And you think, oh, okay, it's holding up, looks good. But as an investor, you're overpaying for the earnings that sector is likely to produce going forward. Probably not a good value, right? So any rally in communication services, in consumer staples, any rally there, you would expect to get stronger, or would it get weaker? Would a rally be sold, or would a rally be bought up and cheered and you know, celebrated and stuff? No, because people, long-term investors, know that that's becoming increasingly more expensive. The value's not there. They're not getting a discount. The price is doing well. They're happy with that. They take their money and they run off to a more discounted area, if you're that type of person. Anyway, so just wanted to share that with you, a little bit of a different lesson there. Our Wine and Wealth this week is going to be on what they're calling the Secure Act 2.0. All those changes that just came out in that spending bill. I did a video that was public to where I just literally pulled up the bill and I started reading through it to explain how we read through it so you can see it directly from the source. Sorry about that. Normally I read first, then I do the video, but I wanted to show you how you can interpret that language. So if you wanted to look it up, you could see as well. What do we got here? Stocks in the news for the day. We're going to start with the one that you've probably seen today, Salesforce.com. About 3.5% higher on the day. If you work for them, there's a 1 in 10 chance you're losing your job. They're going to restructure there. Speaking of people that probably should lose their job, Southwest Airlines says we're going to give, that whole thing where we had to cancel the flights and it was a big chaotic snowball effect, no pun intended. We're going to give customers 25,000 rewards points if you were impacted by that. I don't know if that's a lot or not, but the market sure celebrated it as at least a step in the right direction. Rivian a little bit higher here today. Their total vehicle numbers come out. By the way, this is that time of the month where this happens. So, for example, tomorrow, Ford will come up with their sales numbers. So Rivian, a little bit of a head start. You'll have them coming out little by little, all the big manufacturers. So that'll make the headlines. But nonetheless, Rivian comes out and says, we had, I forget what the number was. What was the number? They were expected to make between like 24 and 25,000. They was somewhere lower than that. But nonetheless, the stock was higher. Someone can correct me on that if you want to be particular. And then also tomorrow, we have earnings from Constellation Brands. And I want to just real quick, I want to just do something. So we're an independent advisor, meaning we can do anything we want for you. We're not beholden to a particular fund or some product or whatever. We do whatever we want, whatever works for you. If it needs to be custom, we can absolutely do that. But we use Goldman Sachs as our custodian. They're the ones that help us place the orders, right? And so that's part of what every advisor works with a custodian. We chose Goldman Sachs because, well, they work with all the rich people. I don't want another company that just works with regular people. I want the help, and I want to be able to give regular people the advice that the rich people are getting. So we've been kicking, fighting, scratching, and clawing to work with them for years, and it just kind of fell into our position. And so think about this for a second. Constellation Brands, we mentioned this the other day, Modelo is their hottest item, right? It's almost over half of their total revenue in the beer category there. So Goldman Sachs, this is the type of research that we get. Goldman Sachs says, we called all 60 distributors of beer, wines and spirits and such, called all 60 of them and said, is Modelo slowing down? Like the sales of Modelo, are you notice that they're staying on the shelves longer and everything? Not one of them said yes. Every one of them said, Modelo's not slowing down, they're killing it, but beer itself is slowing down. That was the negative, the general transaction of beer. I don't know why that is, by the way. Yeah, but apparently you guys are drinking less beer. So beer is slowed down. But imagine the ability to just go, we're going to call all the distributors, and they're going to take our call. And we're going to ask them, is Modelo flying off the shelves still? Yeah, oh, okay, cool, right? Imagine the insight to that. And that's just scratching the surface to the things that they were saying. I was reading through the research. By the way, they did the research because a client asked for them to do the research. So it's a whole long drawn out thing. So cool how they relate all the different categories and prospects of earnings and everything. Nonetheless, Constellation Brands has their earnings come out tomorrow. They are not known for being a stock that, does really well through earnings, by the way. So just a heads up there. On earnings day, it's kind of hit or miss. About 50-50 shot that it's going to be higher or lower. But all in all, they'll be looking at Modelo. So now you know what's the focus going to be. If you're going to have a product that drives that much of your revenue, we need to know what that product's doing. Right? It's kind of like Netflix and subscribers. There's really not much else to look at. How much money do you spend to make a movie or a sitcom or a series? And how many subscribers did you gain from that? I mean, if you know that's the metric, it's not like they sell shirts and stuff. Maybe they do. I don't know. Anyways, tonight on our Jazz After Dark, we're going to talk about how to maximize your retirement savings. And by the way, the word maximize kind of bugs me. So I'm going to go through that a little bit. It's kind of a silly question to ask, but I'll help you understand how to better ask the question. How do I maximize the dollars that I have and be a little bit more direct with that question there? Also on our research site, Cody's just finding out now that we're going to post the calendar of January to talk about, show you the performance, kind of a cool way that we break down that calendar there, and all the upcoming events, days off, Martin Luther King days, you know, a day off there, so things like that. If you're a research member, of course, be on the lookout for that. If you are not, jazzwealth.com/research. If you'd like to join, you are welcome to join. Yeah. All right, I'll try to answer some of your questions here if I can. And we're thinking about, maybe leave a comment or something. We're thinking about, and by we, I mean me, I just thought of this, having you direct some questions to a mailbox, maybe to Cody, and then we can actually post them, share them, and go in more detail with some of the questions. Won't ignore the live questions, of course, but see what we can do. All right, what do we got here for questions? What are some good stocks for short-term trades within the XLB? Google, Meta. So I wouldn't be able to actually legally tell you good stocks to trade within the XLB. What I would do if I were you is I would look up the XLB and I would see the top 5 holdings that make up. Now, it's not as weighted as like the tech sector, so it's not going to be as obvious. I would look at those because they're going to have the most traction. They're going to have the most volatility. And so start there. PBR. See, I'm not a beer guy, so I don't know. Honestly, I didn't think Modelo was anything special. Like, I didn't know they were that popular, but I've been told by many of you that it is. Yeah. Yeah, that's interesting. Does the 212-48 rule apply for cars in the market? Absolutely does. In fact, when I first came up with that, I was much younger, and we ran it through all the different scenarios. And by the way, the interest rates at that time were about 5.5% to 6.5%. So it really fits more ideally now than it did before. Having rates too low actually is, you know, not the best thing, but. And add that to the fact that insurance has gone up as well. Replacement cost for cars is obviously much more, so that means insurance costs more as well. You guys are all talking about your beers out there. I can't hang, man. I don't know. You want to talk like bourbons or something, I can work with you, but I just don't like. There's a new Modelo coming out too, by the way, but like, that part is like. It's like talking sports with me, man. Like, if I didn't see a headline, then I don't know. How low will Tesla go? Is it a discount now? Please don't be like those people online that go, you know, you got to buy Tesla here. And then they refer to the price just a couple years ago and forget that there was a split there. Please. That's so, like, it's like the kids say, cringeworthy. You're like, oh, that person made the video and they clearly now have shown the world they have no idea how this works. And you can't say like, oh, I misspoke. No, you didn't know. That's the bottom line. You didn't know. Yeah. You used to say options play here. Why? Oh, I don't know. Used to maybe have some options ideas. We could do that. Yeah. I have basically an automated thing that looks for me to at least give me some ideas. I just haven't looked at it. Yep. I know, right? Oh, man. Oh, you're asking because, I see what you're saying there, because you bought calls. So buying calls is just a stock replacement. So there's never a real right answer there. You have a directional bet, and you're going to buy the at-the-money call, or closest that you can get. So that wouldn't be something to really talk about. I would treat that the same as stock going higher or lower. You're just trying to do it with less capital. Brandy Old Fashioned. Okay, there you go. Never had one of those, man. Yeah. PayPal on the move. You think fintech's making a comeback? I saw that yesterday. So PayPal was one of the standouts yesterday. If you look at it today, or actually the last couple days, I mean, it's trying. It doesn't look like much when you look at the charts, but remember, you're going to have to do this with a lot of these stocks. Like, if you somehow still want to work with like Carvana or, you know, Zoom or things that have been beaten down, they fell so far that you have to go like this. See? You got to get rid of that decline because all this is being factored in. You almost have to even go in here. And then you have a chart that's a little bit more easy to tell. Wow, was that a big move or was that not a big move? See how everything's all crunched up there? But to answer the question there, obviously it's still very much in a downtrend. So technical traders are going to be using this top area here, call it the 200-day moving average, as a first short-term target. So we don't want to step in the way of that. if I had to make a wager. I would not want to step in the way of that. And I lost the questions for a second. And so there we go. AJ, Friday night fish fry. Oh man, you're already prepping for the weekend with the whole day? Man. Well, we always have barbecue weather down here, so that don't sound too bad, man. I did not actually take time to do a stock pick for 2023, and I don't think you guys be missing out after I had my second place one, should have been my first place one, but coulda, shoulda, woulda. What? Did that not work either?
Well, your gambling record is 3-1 because the year before you won. You just had one that didn't go well.
Oh, I'm 3-1?
Yeah.
Oh, shoot. Okay.
So I think we need a pick for 2023 at some point.
Okay. All right. Well, hey, I'm back in the game. All right. I mean, I have ideas, but I need to do a little more research then. Yeah. Okay. Strong comeback. Okay. I got you. I'm in. That's better than Kramer, right? At least at the moment. Having barbecue at my place. Yeah, man. Hey, we're not... People are surprised when they come by and they visit, whether it's a client or somebody that's thinking about using this or something. First of all, the door's always locked because random people just walk in and we like to know you're coming. But people are surprised when they're like, oh man, you're like a normal dude. That's crazy. A little short, but a normal guy. It's crazy. Uh-huh. I think Miriam's just like mad at everything all the time. That's what I got from her lately. Oh, they could hear you say, oh, you had the mic on. Oh, good stuff. You're getting fancy over there. All right. Yeah. Oh, I know we got a handful of people that they said they're coming by, but I don't know. We'll see what happens. We're here, always here. All right, we're going to wrap it up there. And we'll be back tomorrow, of course, to do this all over again and continue the flow, right? Keep learning through 2023 because this is the year, first time in a long time, you're going to have to think a little bit more detailed about your dollars. So that's why I'm going through that. We can't rely on the stock market to just gain 20% and yay, we're all fat and happy. Can't do that this year. We're going to have to think one step further. So that's my goal. My kind of resolution for you guys is to just be one step more detailed so that you just makes you think of, wow, there must be something after that. There must be something after that. But happy to help. We'll be back and enjoy the rest of your day. Thanks so much for watching. See ya.